as a business owner, an independent landman, you're a business owner. Everyone who steps into that role has to understand they're assuming a whole new level of responsibility when it comes to their financial management, because there's not anybody doing it for you anymore.
If you're going to be a landman and you're going to do this work as an independent contractor for years to come, get it set up right from the beginning. And there's firms that specialize in that, and especially in the oil and gas producing hubs, they oftentimes work hand in hand with CPAs. They have so many reps setting these business entities up, and they see when it goes wrong so they can really steer you in the right direction.
Land insights, market trends, industry experts. Welcome to the Land Department Podcast, the state of land and energy as we see it.
Brett, two certainties in life, death and taxes.
Well, I'm telling you, especially for landmen. Some landmen may or may not pay their taxes, but when you got a guy like Josh in your corner, you're going to be okay. You're going to be okay.
Yeah.
We're talking about taxes for the landman, the CPA for the landman. We're going to unpack a lot about just advice for business entities, things you need to do, what to expect, financial planning, guidance and mentors that you need, kind of beyond doing your land work. This is kind of the financial and tax and CPA side of things. And reached out to our corporate accountant, Fred Immel. Fred connected me with Tracy. Tracy connected me with Josh, and Josh is our man. So shout out to the Oklahoma Association of CPAs for connecting us with Josh. We wanted a CPA that understood the land community and what landmen do and could help walk through just some things, a good refresher for some and maybe very educational for others. So Josh, man, thanks for joining us.
You bet. Glad to be here.
Yeah. So really it all starts with, from what we're wanting to unpack today is independent contractor versus employee, right? I think everybody understands, you're an employee of a company, but if you're a field landman, a lot of field landmen are independent contractors. And so maybe can you just give a real high level explanation of the difference and what governing for purposes of regulation and, legally binding things, what bodies govern that, who defines that or sets the definition that's applicable for us to be concerned with?
Sure. So we're going to kind of talk a little bit here just about how the IRS defines folks as either an employee or independent contractor. I think for most of us, if we're working for somebody, we're getting a W-2, we know we're an employee and we never question it. And we're not going to focus a whole lot on those of you that are W-2 employees right now, but we are going to focus on those where you're trying to decide, or maybe you've already decided you want to be independent, you want to be self-employed. And what really kind of controls or defines your relationship with working as an independent contractor. Like the things to keep in mind is if you're an independent contractor, you're controlling the work that you do, you're controlling when you're doing that work, you're controlling how much you're billing for that work and how you're getting paid for that work. And generally speaking, your contracts that you have with others for that work indicate that you are working for yourself, and that you can choose to work for one company, 15 companies, and those can change all the time. Really, as an independent contractor, you can't have one other entity that tells you how, when, where, how much, and provide you with all the stuff you need to do your job.
To do it.
So.
Yeah.
So if you're looking at working with another company to provide them with landman services, I've seen stuff every once in a while that gets people going the wrong direction, where they give you effectively a non-compete clause in there, where they only want you to work for them, and that's probably a sign that you're headed in the wrong direction if you're really trying to be an independent contractor, self-employed.
Yeah.
And where people tend to get sideways with this is, like, it's not that first person, like you go out there, you start your own, you work for you don't have anybody else working for you. So you're enjoying the diversity of working with 10 different people on whatever projects you pick and choose for your schedule. So when you decide that you get too busy, now you need to hire another one or partner with somebody else. This is where that kind of comes into play a little bit more. You get that first person you need to work with you on your team And you need to understand, am I hiring a contractor like I was potentially, right? Like, or like you are to now, or am I hiring an employee? And if I'm giving them their laptop and all their software and I'm paying all their licenses
And I'm making them show up at the office.
that's right. They're coming to my office on my time frame and I'm giving them all the work they need. You've hired an employee. You haven't hired an independent contractor.
Yeah, whatever you call them is irrelevant. So let's, you touched on the kind of the important things. It's how you treat the person that defines from an IRS standpoint and a Department of Labor standpoint, how you treat that person is what truly defines them in the eyes of these governing bodies that we all have to follow the rules by. So,
right. And your risk as a self-employed person, really from the IRS's point of view, where they've gotten more aggressive is they like to pursue payroll taxes. So if you hire an independent contractor, and for example, where we see this really get sideways is you've hired an independent contractor and they don't pay their taxes. So the IRS notices them and starts looking into, the income they make and notices that it's all coming from you. If they determine that person should have been an employee of yours, right now you're on the hook for all the payroll taxes that you should have paid according to the IRS. Yeah. And even if you win that process, right, it's an expensive process to go through, especially when we start talking about payroll taxes.
Yeah, they're going to follow the money, right? And the burden of proof is on you as the person who has hired a group of people or have a group of people working. So if you're a broker, big or small, it's upon you to convince them that these are not employees. And so there's a number of things that you can do to establish that, to clearly define that. And God, we can unpack that in a lot of different ways. And I think it's probably a good segue is, with our business with Dudley Land and other brokerage firms out there, we require independent contractors to truly act as independent contractors. They're not provided an office space. They're not provided, training or anything like that. We don't require that they work for us exclusively, but they have to sign an agreement, right? That says, hey, I'm an independent contractor. It can come and go as I want and do it as I please. But we do have a contractual relationship, like you would hire a plumber or hire a general contractor to build your house. Same kind of concept there.
Yeah, and of course, like the contracts are important. I'm not saying you shouldn't have one. Just keep in mind what they say and who they're with.
Exactly.
Right. A lot of this, like we just advise folks a lot of times to, it's a little easier to prove this point when the people you're working with are working under their own entity versus just working under as, Josh Mullins CPA or Josh Mullins Landman, right? Like if I have an entity that I'm working as a part of, then I'm starting to make the case that I don't work as an employee of yours.
Exactly.
That I'm over here working for me.
Yeah. It's going to be very common in the industry to be required if you're a field landman or you're working as an independent to have a business entity, to your point. But there's some difference between just a business entity. You've got S corps, LLCs, partnerships. Maybe unpack a little bit the basic differences in these types of entities, and what is the preferred entity that you tend to see for people in our profession.
Yeah, and I think I should start this off by just saying like we talk about LLCs, and LLCs, okay, I'm a CPA, I'm not an attorney. So getting into the legal side of things, that's not where I play, all right? Yeah. But just so the folks that are listening understand, an LLC is just a limited liability company. There's state laws, so every state's laws can be just a little bit different when it comes to an LLC. As far as tax purposes go, that LLC can be reported multiple different ways. So generally, we see an LLC be a really common entity type, good for professional services like Landmen or lots of other businesses, because its purpose is to help provide liability protection for you as an individual or as an owner of that business. For tax purposes, that can show up all kinds of ways. It could show up on your personal 1040 tax return that you file, like on your Schedule C, just as effectively as kind of like a sole proprietorship. It's just a single member LLC. I'm the only owner. I own it all. So I'm just going to report it there. I don't have anywhere else to put it. Those tend to raise, the
Some
IRS
red flags.
Yeah. I mean, it's really common. So I don't ever sweat it over, somebody who reports and their LLC on their Schedule C. But it can contribute to more attention. You can set up an LLC to be a partnership. So, for example, in Oklahoma, let's say it's you and your spouse that want to set up a company because y'all are going to work together to get all this stuff done. In Oklahoma, a husband-wife partnership, 50-50, whatever it is, 90-10, that would require an extra tax return. If you elect the partnership structure, then we're talking about like a 1065. So now you're putting all your business activity on a different tax return, and you're getting a K-1 from it. S corps are another real common one for people that are in like professional services. We're providing our time and our expertise, and those can be really handy. Generally, you need to have some kind of expectation that you're probably going to make, enough money for it to be worth it to get into that kind of entity type. Because an S corp is going to come with, you're going to set payroll up for yourself. You can be 100% owner of an S corp if you elect that status for tax purposes. It's still going to have to file its own tax return. So we're filing an 1120S tax return. You're going to get a K-1 that you have to use to put on your personal tax return. Mm-hmm. But generally speaking, if your company is making money as an S corp, you need to be paying yourself payroll, which means you've got to file payroll taxes. You got to file with your state to have, unemployment insurance. Yeah, you're going to be doing that kind of stuff quarterly, and it takes a little more work
to do in maintenance.
That's
Would
right.
you say that the S corp? I mean, because personally, like Dudley and Lane Company, I'd say we have some requirements for the business entity types that we will contract with for all these reasons, and I'd say the S corp is the most common, that our contractors fall within. And for us, from a company standpoint, it provides the most insulation. You mentioned earlier, if you see an LLC, it's kind of a little bit of a red flag. What's the difference there in the level of, I guess, legitness of an S corp being a standalone protected business entity versus just a single member LLC going under a social security number as opposed to a tax ID?
Yeah, I mean, so generally speaking, like even as a single member LLC, right? I can go get my EIN with the IRS. I can give that to the bank. They'll accept it. I can give your company a W-9 with my single member LLC's name on it, my EIN for tax purposes. I can do all that kind of stuff. I register with the state to do business as a single member LLC, and I'm putting it on my personal return. If you're really doing it all right, like you're just as legit as an S corp, because that same LLC. I mean, like let's just say, for example, I'm Josh Landmen LLC today, and I have a good 2025. Maybe I make, $50,000 or $60,000 in profit, and then in year 2 I go, I've talked to my CPA. I'm making enough money. I want to step into S corp. All I have to do is make an election for tax purposes, and I just convert my, you get the appropriate paperwork filed with the IRS, and I'm converting my single member LLC into an S corp. And as far as its EIN is concerned, and the name of the business, it's the same entity. I'm just filing it for tax purposes different.
Yeah. Josh, on the taxes for the S corp, isn't one of the primary reasons a lot of single members will do that is to where they can not have payroll taxes on their distributions?
So if you're yes, it is a consideration. I mean, I should say that up front. So if I've got, either a single member LLC that I'm just filing on my Schedule C, or even if I'm in a partnership, if it's me and a friend, or me and somebody else, me and my spouse, all the income that's coming out, generally speaking, from a partnership or a sole proprietor or Schedule C, all subject to self-employment tax. Okay. So that's where you're getting into kind of like the payroll tax differences. If I elect S status, then I'm supposed to pay myself payroll.
A salary. Yeah.
Right. Of some reasonable amount. And generally the way I approach that is like, if you were to pay someone to do your job for you, how much would you pay that person? That's a good, just kind of safe place to start. If apply some common sense to it. If I hired the guy next door to do this stuff for me, what would I have to pay that guy? It's a kind of a gray area. I mean, you can go online and spend a few $100 and do a payroll survey nowadays, which it's way faster. You just kind of describe the job that you have and you get, a little sheet back, a report back that says, here's reasonable salary for the position you're looking for.
Yeah.
But we always just start with kind of what would it take to pay someone else to do what you do? That's a pretty good place to start as far as reasonable salary goes. Right. And I've seen people come in from other places who ask us to kind of get involved, and they got a new S Corp. They set up a reasonable salary, and it's like, well, I'm paying myself $150,000, and their entity is early on. It's not making a lot of money yet. They're actually having to put money into the business in order to pay their own salary.
Yeah.
And I'm like, that's not the goal of this. It's not to have to fund my own company to have payroll. It should make sense with the level of the company. So if the company's not making a bunch, I'm not saying you need to pay a big salary, but there is that salary component. And generally speaking, the payroll tax savings that you referenced at the beginning of that part is really just the difference between what I'm paying myself, because I'm paying payroll taxes on that part, both the employer and the employee side. And then the distributions that I can take, the net income in excess of what I'm paying myself.
As the business owner.
If I had $200,000 in revenue and I paid myself $100,000, I'm paying payroll taxes on $100,000. Whatever the net income is left on that extra $100,000 difference, right? Then I don't have to pay self-appointed tax on that. So it can definitely save some money.
If you select the appropriate. Yeah.
Right.
I mean, I know looking back early on for me, when I was an independent contractor, worked with a firm very similar to y'all's firm to help me set this up and set it up properly. And this was done for a couple of reasons. One, guidance from, my superiors, my mentors in the business, save some money, pay your taxes, get your business entity set up, take advantage of what you can do, expenses that can be burdened by the company versus what are personal expenses, right? So I set all that up. I was also required, by the group that I was working for to have an appropriate business entity set up so that they were protected and our clients were protected from, the IRS coming after them, or a Department of Labor audit, showing that I was an employee versus a contractor. But, when you do pay that salary, it's important to not get, to your point, too crazy. You can keep it lower. Mine was a minimal salary. So I could reduce my tax obligations there. And then I would take distributions from time to time if needed. And then I owned my truck and my business, and my office equipment and things like that were brought through the business. What are some practical, if someone does have a business entity set up, what are some practical, conservative advice on what kind of expenses are business expenses versus what is a personal expense, that you should be paying out of your salary?
Yeah.
Business, jet ski, boat.
Yeah.
All
Pontoon, four-wheeler, for sure. You got to have a couple four-wheelers.
Yeah. So let's take a little bit of a common sense approach to this. And one thing I want to keep in mind, like a lot of independent folks, they don't have an office. They're working from home. A few years back, the tax law changed where as an S Corp owner employee, there's really not an easy path to take a home office deduction anymore. So just one of those things to keep in mind. If I work for myself on my Schedule C or in a partnership type environment, I actually can take like a home office deduction pretty easy because I'm not an employee. When itemized deductions changed back in like 2017, 2018, they took like employee expenses off your itemized deductions, and that's generally where someone might run through a home office deduction if you were an owner employee of your S Corp. Now there's some ways to do it, but they're a lot more complicated, and you got to have somebody who's willing to jump through the hoops and manage it all the right way. So that's just one thing to keep in mind. If you work from home and you're an S Corp owner, there's not just like an easy path to take a home office deduction anymore. So that's one of those business expenses where you might look at it and go, well, if I'm this one entity, I can take it. It's easy. I just fill out the form. If I'm in the other type of entity, employees don't get to take home office deductions. So I've got to jump through a bunch of hoops, and it's going to have tax consequences in other parts of my life that I've got to deal with that. Okay, now as far as just business expenses are concerned, right? The thing that we always have to focus on as far as the IRS is concerned is it necessary and normal business expense for what I do? So, you kind of joke about the different types of vehicles, right? And if you live in Oklahoma or Texas and you're in the oil and gas industry, I bet you think right off the bat, I can't wait to ride off my truck.
The big old F-250 too.
That's right. And as a CPA, we kind of joke all the time, we can't have like fancy sports cars because our clients look at us and go, I can't believe I'm paying for that. But we can have big trucks because, big trucks are normalized. You live in Oklahoma, Texas, you can have that, whatever, the
Corvette
Chevy,
of a
whatever.
truck.
Yeah, right. Nobody blinks an eye at a big truck because everybody knows we need those around here. So you have to keep in mind that when you're an independent contractor, that truck may be fine. But we always tell our folks that we're not going to put it on your tax return unless you are using at least 50% of it for business. We could take mileage if you're under that, or if you don't want to go through the trouble of buying it in the business. But if you really want to like take depreciation, bonus depreciation, Section 179 depreciation, and really write that whole vehicle off. If you're a partnership or a sole proprietor with your LLC, single member LLC, then your personal use of that vehicle, we're going to have to account for it. And personal use is like, let's say you do have an office. You drive from home to your office and back home every day. That's personal use, just like anybody who works for somebody else. I don't get to write the mileage off. It takes me to get to work and get home. That's just commuting miles. Driving to different clients, that's fine. Driving to the courthouse, if you got to go do that for research, that's fine. You got to actually go, somewhere. You want to take a client out to lunch. That kind of stuff is fine. But if I'm going to my kid's soccer game,
Not carte blanche.
that's not business miles. If I'm going to the grocery store because somebody told me to, so I can take the groceries home, that's not business miles. If I'm headed to church on Sunday morning, that's not business miles. And I've been around plenty of entrepreneurs who say, but Josh, I'm always on the clock. So everywhere I go is business. And I get that. But just because
that
thought you were
auditor
headed
isn't going to
somewhere-
care about that.
Yeah.
That's not going to fly. It's dollars.
Yeah. So this comes into play a lot with like travel as well. We have a lot of clients who want to know, how can we deduct travel miles? How can I make it worthwhile if I want to go somewhere? I mean, a lot of people I don't think understand that if like, let's say, you're going to go to New Mexico because you've got a potential new client and you're going to head out there on a Thursday. So that's your business travel miles. You're meeting with them on Friday, and then you're going to meet with them again or do some follow-up business out there on a Monday. That weekend expenses where you're there, generally those get to continue to be business expenses because your Friday and your Monday were business for that trip. So there's some details you got to pay attention to there, but a lot of times that whole weekend might be business as well. And a lot of business owners don't necessarily know that.
Well, that's having some good advice from and a good steady CPA is solid.
Yeah, I mean, having a good relationship so that there's enough communication so we can say, yeah, this is how we put this in, the things you need to do to make sure, we can take a deduction for it. But like vehicle stuff is not unusual. You just need to know the rules that you're playing by. You got to keep in mind that if you think you're about to go out to lunch every day so you can work, generally you need to be with clients to do that. And with clients, it's still going to only be 50% of that money you spent is going to be deductible.
Yeah. A lot's changed in recent years. You mentioned 2017 and 18 being kind of when things changed. and that had to, a lot of that had to coincide with the decrease in the corporate tax rate. Was
That's
that
true.
Yeah.
Yeah. Yeah.
Some of the tax cuts
Decreasing
they
the
cut.
corporate. Yeah.
They cut some of the deductions and things that you could do out, but we were kind of in a good segue about bookkeeping. You know,
Yeah.
if you're doing these things and you're going to write off these things, you got to show your work. What are kind of some of the best practices for your bookkeeping? You know, you have your S corp or whatever entity you have, and you're doing your job. How do you need to keep your books? What do you recommend?
Well, okay. So first off, the IRS, if you're going to do this as a business, requires you keep accounting, good accounting records. I mean, it's in their guidance right at the beginning. If it's a business, you have to keep good accounting records. And the first thing we always tell every new entrepreneur, and generally the first thing they ignore, is keep your expenses and your income separate for business purposes. So open you up a business bank account, and your revenue gets deposited into that bank account. Your checks you write get written for business purposes, get written out of that bank account. We tell them all the time, if you need a credit card for stuff, it should be a business credit card, and only business transactions run through it. Don't put your groceries on it. Don't put your spouse's car payment on it. Don't put trips to the movies on it. That it should be separate and apart from all those things. Some of that has to do with the ability to maintain your legal liability status. Some of it is just, it's good practice. Mm-hmm. It's easier for you. It's easier for your advisors. If you're not constantly having to try and figure out how to take all that stuff out that doesn't belong there to begin with, to come up with your financial statements, to see how your business cash flow is. So
it save you money on tax preparation at the end of the year. If you say, here are my business expenses, this is what I have set up. Much easier there as well for you guys. Correct?
Oh, for sure. For sure. I mean, look, we work with new business people all the time, and it's hard when you're starting out because a lot of time you're putting money in as the owner to keep things going, and you're taking money out when you have some extra. It's just the more organized you are with it from the get-go, the long-term benefit is that it's going to cost less to do it. You're going to be better organized, and you're actually going to be able to tell what's going on. You know, we were kind of joking at the beginning of this. If there's just stories that I had regarding like lessons learned, and you know, it's a day-to-day kind of thing. All the time we have people who come to us and we say, do you keep your business and personal stuff separate? And they shake their head, they nod, they say, yes. Yeah, I'm getting better at it. And then they give us a box that's their personal and business bank statements and credit card statements, and go, I do spend some pretty much everywhere. And it's just one of those things, right? Like nobody has that crystal ball. Most of the time, not even the business owners actually know. You're looking at it, you know, for 12 months ago, 16 months ago, and you're going, was that Taco Bell trip for, you know, a client meeting, or was that just you? And
we love chalupas.
Yeah.
And
not knocking Taco Bell, you know, I'll eat a nachos Bill Grande every day.
so, you know, it's just, we, as your advisors, we don't have all the answers. I mean, there's some things that are easy to tell. You know, your business insurance is coming out of it. We know that that truck that we put on the tax return, you know, that's the mechanic shop. We can tell that's related to it. Maybe it's your gasoline for it. Seems reasonable.
Yeah. A seminar.
You know,
seminars,
there's
educational
things
stuff.
that jump out where we go, okay, you know, the expectation is this is business stuff. But when people just mix it all up together, I mean, what we end up with is a whole lot of work trying to sit there with an owner who's going like, why am I paying you guys to do all this stuff? You're asking me all the questions. And the answer is, that's right. That's right. You are the only person that knows. Yeah. And so you're going to have to answer us so that we can put together your financial information for you. And then potentially we're doing a tax return for you.
Yeah.
So it really is important. I mean, I would say if you're the do-it-yourselfer and you're going to just start your accounting from scratch, you know, QuickBooks Online is a decent paid, you know, tool to just get started. There's other ones out there that you can get for free that are like advertising sponsored, and they work well too. But I would say when you're getting started, even if you're going, I'm going to do all my accounting on my own, find someone who can help you set up your chart of accounts and explain to you what these are for, so that when you go to use one, you know what you're supposed to put there.
Yeah.
So that it's just a little bit better when you run your profit and loss statement as an entrepreneur and you go, okay, I got 6 different folks that I'm working with, and I can tell that I'm making the most from this source, that source, or the other, versus a lot of, early entrepreneurs' reaction is you get to the end of the year, you say, well, how good was the year? I mean, I'm feeling pretty good. Like I paid my bills. My bank account got a little bit more in it.
I'm still a landman. Still a landman
doing it
today.
again. Yeah. And like sometimes it is that, right? For entrepreneurs, you tend to kind of know how things are going. But that accounting, having it there really lets you pay attention to what's going on, especially when we turn it into that bill that you weren't planning for, the tax one that comes based on all that activity you had in your year. And that's where we find, you want those awkward moments, the lessons that nobody likes to be the teacher for. It's when you're talking to a client and being like, you had a great year this year, and they're all excited about it. And this is just, a lot of times for whatever reason seems to happen right after they spend a lot of money. They went on a big trip, they bought that new house, and they made that extra deposit because they had all this cash. And you go, okay, but did you plan for all your taxes? And they're like, well, I didn't really know what I was making, so, I figured it'd be fine. And we have to sit there and a lot of times you just have to break hard news, which is, you had a great year, and I'm glad you've had all this success, but that tax bill, the IRS, the IRS, the state, they're not going to let you off the hook for that one. So we got to figure out how to make up for the money that you don't have in your pocket right now.
Yeah. So it's just a matter of best practices. You want to keep good books, keep good records. That's going to keep you out of the ditch. It's going to keep you informed. You can understand, what your obligations are, what you can spend and what you can't. Hopefully you're maximizing your deductions, and you're running your business like a business.
I mean, I think that's the hardest transition from being an employee to being self-employed,
Yes.
right? Is when I was an employee, I got my W-2. I cared about
worry
how
about
much
a thing.
my revenue was, my salary was, or how much I got paid by the hour, because my employer took out payroll taxes. So when I got to the filing my tax return, most people can manage because it's getting taken care of for them. As a business owner, an independent landman, I mean, you're a business owner. Everyone who steps into that role has to understand they're assuming a whole new level of responsibility when it comes to their financial management, because there's not anybody doing it for you anymore.
Yeah.
I mean, if you don't have accounting records, you can't plan for what you need to do. You don't really know if your cash flow is good in, the summer, the winter, the spring, all year long, only when, someone gives you the phone call and says, get after it.
Yeah.
So those things are important just because your whole business now is, in a lot of people's cases, their business is now their sole financial provider. So if they don't know what they're doing, then it can provide not just more expenses when it comes to working with like a CPA, but you're talking about stress that just from the unknown, right? Like I just don't know what I'm doing and I've got to worry about it.
Yep.
Yeah. Josh, do you recommend any like frameworks or systems for cash management, like Profit First?
Well, so in a lot of ways early on, I think all of us as entrepreneurs are making sure we've got enough business to just justify being out there. Sometimes that just takes time. Sometimes it's a whole lot less about, my margins at the get-go, and it's more like, even if I have to work twice as much, that's, 10 grand in the bank today. In a year from now, hopefully I can say no to that person. But right now I say yes because I need to.
I got to. Yeah.
That's right. So we always have to just keep that in mind. I mean, it's great if you're already financially independent and you have the ability to say, I'm only going to take the work, that I want to take with the margins that I know I can make. But the reality for most entrepreneurs who are stepping out there is you got to take what you can get in the beginning. And you have to work a lot to make sure that it's worth it. So, we're always kind of just like, do what you have to do to get your business to being successful. But again, going back to the accounting for it, that's where that knowledge is at. It's sitting there waiting to be useful. So when you've gotten to a point where now it's, okay, I could say no if I want to. I don't have to say yes anymore. But how do I know which ones to say yes to? I mean, there's always the gut feeling, but it's always good to have that financial information sitting there for people to take advantage of.
Well, for Landmen, it tends to be pretty straightforward. They bill for, time. You know what I mean? Some Landmen have job flat rate billing, but you're going to know where you stand typically. Am I working every day? What's my day rate? Right. And so the good place to start is, to your point, keep good books, make sure you're setting enough money aside for your tax obligations. Don't spend it if you don't have it. Understand what you're making. Separate your expenses as are generally, accepted and reasonable. And then as you grow, as you maybe start a side business, as you're doing land work and you're doing something else, then it's, really monitoring what is the most profitable. Are there more expenses that I can cover and run through the business now? Those things that progresses. But as you get successful, maybe you're running a crew, maybe you've got 5 or 6 people working with you now. What are some of the things as you maybe start to build your business? If you're in the land profession, you decide to start a brokerage firm or whatever it might be, or, you want to start a lawn care service that you're going to do on the weekends or in evenings, whatever it might be. You need a team. Obviously we've talked a lot about accounting and, your tax obligations, but what other advisory folks do you need to have in your circle to kind of help support you beyond just the tax side of things?
Sure. I mean, look, I don't do law work, but lawyers are important to have, especially at the beginning. Going back to that, which kind of entity are you choosing to be? Like we talked about, an LLC can be different types of taxable entities.
Yeah.
Right. And you need a lawyer who can make sure that your documents are written the right way. I mean, just a quick thing, S corps, they're real restrictive on what kind of ownership can be in an S corp. And a lot of people will make an LLC, go to an attorney or get online and they've got an operating agreement written up and they think they're good to go. Then they step in to somebody saying like, let's make it an S corp, and nobody thinks, okay, my operating agreement that I had as a LLC, whether that's a single member or as a partnership, it's no good if I'm an S corp. I need to get it written as a corporate document. I need a shareholder agreement. And having an attorney that you trust and who knows business org docs, that's important because, what you don't want to end up with is an S corp that the IRS says is not an S corp anymore.
Yeah.
Simply because you just didn't know how to dot your I's and cross your T's.
Yeah.
So that's something to keep in mind. And that attorney can be there to make sure that you've got good contracts with your vendors that you're working with or your clients that you're working with. Mm-hmm. They might be able to make sure that, they might point you in a good direction for, what kind of insurance that you need.
Whatever you might need. Yeah.
And even if you don't have to use them often, because you don't want to have to use them often, you want somebody who understands the industry that you're in case you do have to deal with a lawsuit.
Yeah. A lot of, a lot of our folks, I did it as well. Early on when I set my entity up, I went through an attorney, and it's an investment, right? You can do this stuff on your own. You can research, the internet gives you all the answers, right? But the experience and knowledge of a firm is well worth the time and investment if you're going to stay in this business. If you're going to be a landman and you're going to do this work as an independent contractor for years to come, get it set up right from the beginning. And there's firms that specialize in that, and especially in the oil and gas producing hubs where it's, a lot of landman community, you're going to be able to find someone who has that experience, understands what you're doing, and can help set you up properly and advise you accordingly. They oftentimes work hand in hand with CPAs, with that initial setup and how you're doing things, but highly recommended to have good legal counsel. And not only just from a business setup standpoint, but you're going to get in some situation at some point if you grow your business or evolve where you're going to need some more guidance. And either they're going to be able to help you in their capacity as an attorney, or they're going to be able to refer you to someone. It's really just a matter of exposure. They have so many reps and setting these business entities up, and they see when it goes wrong so they can really steer you in the right direction. So great to have that. That kind of leaves one last thing, and that's how to manage your money, right? Landmen, we live in ups and downs, right? You make hay when the sun's shining, but you better be planning for the time that it doesn't.
I've worked with Landman for a long time. I had a client for a long time that, he was further into his career than I was. And we were sitting in his office one day, and he said, Josh, I hired these guys. They're smart guys. It's, the oil and gas industry is doing really well, and we're all making a lot of money. And I tell them all the time, you got to save some of this money now, because the oil and gas industry is not always like this. There's going to be periods where it's just not that great, and you need to be able to have put some away so that you can maintain the lifestyle you want. Because it's the hardest lesson these guys to learn, because they just think, it's flowing freely and it's great. And it's always hard to see kind of when the end of that period of the cycle comes to a close. So having a good financial advisor, and a lot of times people will think, well, I've got a CPA, and sometimes we do act in that role. That sometimes is based on experience, or just the kind of work that we do. So not every CPA
a lot of
is going to
exposure.
provide, really good financial, act as a financial advisor. Sometimes financial advisors, you may have them more in like a non-business role. They might be involved in your retirement planning. They might be involved more in like your personal financial budgeting that you're trying to do for you, your family. They might be involved in helping you have the right kind of insurance coverage. Now, what I tell all of our clients when we start talking about an advisory team is that I tend to think I'm worth more, like I'm more valuable to you as a member of your team if I am involved in some capacity with your attorney and your financial advisor, right? Because they know stuff. They're there hopefully for a really good reason, and that's because you've put people you trust in place. But your financial advisor, if they're trying to advise you on what to do with, your portfolio that you've invested in, your retirement income you've got going, and they don't know that we're working on a merger or acquisition over here on the other side that's going to take a lot of cash flow, it's really hard for them to give the appropriate advice. If I'm sitting there trying to figure out how much your taxes are going to be, and your financial advisor is telling you you're having a banner year in your investments, and I say, well, all I see is your business income and what comes through on, a 1099 when we get them eventually, then my advice isn't as good as it could have been had your financial advisor and I had a good talk about it. Your attorney might be for your estate, and trust stuff. They might know that you're planning on giving or receiving some type of gift or inheritance. And, we might want to structure it for tax purposes one way, and they might have something else in mind. And it's not to say that either one of us are wrong, except we don't know what the other person's thinking.
You don't have the knowledge of what's going on with the other.
So we work sometimes with clients who just think, well, I'll know everything as the person, and I'll tell you what you need to know. And we just have to trust that can happen. But I tend to always lean into, like, you're hiring all these people to give you great advice. Let them work together at least a few times a year, where they really get to make sure they have a better view of your picture as a business owner, as an individual, so that we're more valuable to you.
Exactly. Well, when you're a business owner, you have different needs for capital, right? You may be socking money away in an investment account because you know you're going to have to pay taxes quarterly or you're going to have to do a catch up annually. You want that money to be somewhat liquid so you can access it. And if your financial planner doesn't truly understand your business, or you as the business owner, you're a great landman or you're a great technician or whatever it might be, you're not supposed to know all these things, right? You're not supposed to know all the ins and outs of tax and legal obligations and business document requirements and financial planning. But when they're informed, when your advisors are informed, they can make the proper decisions. And so having access to your accountant and your legal advisor from a financial standpoint is critical. I know our financial people are talking to my accountant on a regular basis. They need to understand what's going on. They talk to our CPAs, they talk to all the different people, our legal counsel, whenever we're entering agreements and doing things like that, all that fits together. So it's super critical. I think just the biggest advice for landmen, build that network of advisors because you're going to need it. It's a lot easier to stay on the road than dig yourself out of the ditch.
For sure.
If you're ahead of things, you're going to you'll have a lot less heartache when the times get tough. You're prepared for it, and it can help, level out the ups and downs that are just evident in the land profession. If you've got your thing straight and you've built a little bit of a nest egg.
Yeah, and I think with all this whole conversation we've had so far, it can feel kind of overwhelming when you're taking all this information in. And I'm sure being a landman is similar to being a CPA. You have friends in the industry, right? You have mentors in your industry. The best place to start is just go talk to someone that you trust and let them know, like, hey, I need an attorney. You got anybody in mind?
Yep.
Right. And in that way, it's not all on your shoulders to start from scratch with all this stuff, right? There are people out there who have good relationships with their advisor team. And if you know someone that does, it's a lot easier to just start with someone that you know who knows someone. I mean, that's how the three of us have connected today, right?
That's right.
Use your network.
Yeah, use it. There's value in that for sure, and it's important. I mean, Khalil and I just did a podcast talking about mentorship, talking about skills and networking and all those things that allow you and give you access to people who you can bounce these ideas off of. It's important, and there's value in mentors, and you have to seek them out. Sometimes they come to you naturally, but other times you have to go get them. And there's a ton that you can get back from that if you invest the time in it. And
Sure.
You're not supposed to know everything, right? I was a 23-year-old landman with my S corp, and I had to get my accountant and my legal guy to give me like a bullet point, like, okay, what do I have to do each month?
Yeah.
And I was just checking off a list, and it starts there, but the more accustomed you get to it, the more, years pass where you start to see, oh, I didn't do this, and this is what it cost me. I can make that little adjustment. And before you know it, a few years in, you're running a smooth operation, and then you start to see how you can apply that into other things. Maybe the next thing that you want to tackle, the next business you want to start, or whatever the case might be, it's a lot less daunting because you understand, oh, I can run this business part. I have the people that can support me. Now I can focus on making that a successful business. And if you haven't got that groundwork, man, you can leave something behind and end up in trouble.
I think one of the things we all learn as we get into business and we find success, a lot of times we realize that success in part came because we were proactive with outreach to our network, to our team, right? It's way easier to get started on the right foot if I plan ahead. We see it all the time in our industry. I'm sure you guys do too. You act on it because you needed to, and then 6 months from now you tell somebody you did something and hope that we can figure out a way to make it work the way we all want it to.
Boy, I've got myself in trouble with that. Oh, Fred's got on my tail a bunch of times. Like, now before I do anything, I call Fred. And I call Rebecca and say, hey, I'm about to do this. Is there anything I need to know?
But that's, whether it's your attorney or financial advisor, your CPA, we can all do more and better if we get started on the right path before we're 10 steps down the road, hoping that it'll all work out.
Awesome.
It doesn't always work out that way. Sometimes you just have to take advantage of the opportunity that's in front of you. and I get that because I'm a business owner too. But if we have that opportunity to say, okay, I've got this opportunity, let's structure it the right way, then we can save ourselves some heartache and make it a lot easier a lot of times.
That's right.
Yeah. So much knowledge. It's great.
A lot to unpack there, but with that, talking about advisors, Josh, how can everybody reach out to you guys? Tell us a little bit about where you practice, where your firm operates, how you can help, how people can reach out to you.
Sure. So my name's Josh Mullins. I'm one of the owners of Arledge & Associates. We're an Oklahoma City-based firm. You can go to arledge.cpa. That's where our website is. We provide assurance services. We're talking audits, reviews, compilations. We have a whole outsourced accounting team. So if you want to focus on your Landman business and you don't want to have to mess with your accounting as much, I have a whole team of people that can help with every aspect of that, from helping on your schedule, doing one little thing, to taking over your whole accounting department if that's what you want. I personally help run our tax department. So we handle business tax, individual tax, trust. We like to do a lot of that planning. The client interaction for us is where we really enjoy getting to be a part of our clients' teams. We have, our office is in Oklahoma City. We work with clients all over the country.
Good deal. So,
and not necessarily just oil and gas, but we're here in Oklahoma City, so it's definitely a part of our clients' lives.
And a good start is you know what a landman is. So if you're
That's right.
landman out there, you need some advice or some folks that have some experience in the type of work that we do and the type of business entities that are common in our space, give Josh and the guys a call.
Yeah,
we'd
we'll link
appreciate
to
it.
everything in the show notes, Josh, and the listeners that don't click in the show notes. It's Arledge, ARLEDGE
That's right.
.cpa. So
That's right.
awesome. Cool. Well, thanks for joining us today, Josh. It's been a pleasure.
It's been my privilege. I appreciate you guys having me on.
Thank you, Josh.
You bet.
Enjoyed today's topic? Follow us on Spotify, Apple Podcasts, and YouTube. Learn more at dudley-land.com. See you next episode.